Not much to cheer about on Wall Street today. The Dow fell another 740 points over the threat of a possible economic recession. The S&P 500 tumbled even more, putting it firmly into a bear market.
That's not an official term, but more of an arbitrary marker as investors worry about the future. So what is a bear market and how long might it take to recover? Those are good questions for Heather Brown.
It's a sharp reversal for the stock market.
Americans are worrying about their retirement funds.
We're looking at, Tony, a bear market.
Bear market, a bear market. That means that the index fell 20% or more from a recent high.
So how often does this happen?
Pretty often.
Murray Frank is a professor of finance at the Carlson School of Management.
Every 3 or 4 years, roughly, for the last few decades.
About a dozen times since World War II.
The last one was early 2020.
There is enormous concern about the economic impact of the coronavirus.
It was relatively short, lasted 33 days. The one before that, the 2008 financial crisis, was a year and a half. And the 2000 dot-com bubble burst before that went 2.5 years. How long do bear markets usually last?
On average, they're probably around, 9 months or so.
But they take longer to recover what was lost.
If the next few years are average, you're probably looking, say, 3 years out, maybe 4 years out to get back.
Okay.
But that's not a guarantee, right? That's just like a long-term average.
How are you feeling about the stock market?
Not great.
Not so hot. I don't really feel that great about the economic status of the world right now.
Do you follow it closely, or?
I try not to. It's too stressful.
Warning signs that a recession could be on the way.
Bear markets aren't always followed by a recession, but it has happened about 75% of the time. But bear market doesn't cause recession.
Not by itself. It reflects people's expectation that a recession is coming.
By raising interest rates, what's happening is they could actually tip us into a recession if they go too far, too fast.
In the average bear market, stocks lose about 35% of their value.
Right now, we're down, last I looked, about 21%. So if this were an average market, bear market, we've still got a ways to go before we hit bottom.
What can the history of bear markets in this country tell us about what the future might bring?
Bear markets are not always accurate predictions, right? So it's not a crystal ball.
Heather Brown.
But there are a lot of forces in play right now that look pretty bad.
WCCO 4 News.
There are two theories as to where the term bear market came from. The first is bears themselves. The animal attacks by swiping downward.
And the other goes back to bear traders in the 1700s who would sell the skins before they got them and hope that they could buy them later at a lower price. If you have a good question for Heather, email her through WCCO.com/links.